The Canadian real estate market is at a crossroads. High interest rates, rising inflation, and an ongoing tariff war with the United States has left buyers and sellers wondering what's next. After years of rapid price gains followed by market corrections, affordability still remains a major hurdle. Conflicting economic signals are making it even harder than ever to predict the next move. So, what's the right play? Should you buy now before prices climb again? Should you sell before another shift hits? Or should you just sit tight and wait for the dust to settle? In today's episode, we look at some of the issues that are driving this uncertainty, the numbers, the trends, and hidden forces shaping the Toronto GTA housing market and beyond. We'll discuss tariffs and rising prices, inflation, and how all of this is affecting consumer confidence, what the Bank of Canada's next move could mean for mortgage rates, and whether this housing crisis is really as bad as it seems. Is it? I welcome back three great GTA agents, each with over 30 years' experience. They've been in the fields with their lenders, their clients, their team, and fellow realtors across the GTA. What are they hearing and what are they experiencing? I invite you to listen in as we discuss these issues and help you make sense of this wild real estate ride. Because in a market like this, knowledge is power. Good morning, Ruth, Colleen, and Craig. Welcome back to Realty Bites. So I'm just curious. This is something that I think we've all been hearing in the news, a little overwhelming, I'm sure, for all of us. What are you hearing from, let's start with your clients about all of this uncertainty in the marketplace?
I think most of my clients have been talking in the last little bit in the last week about how they feel a little bit better from the turbulence that we had the weeks before. So just a small little piece that's saying it was awful. We didn't know what to do, but in the last week, calm down enough that we can maybe start to see into the future.
Yeah, I think that's what I've been hearing as well. I think we've heard about it every day, every minute that we turn on the news, and it just after a while just becomes it's the same old thing. Are we having tariffs today? Not having tariffs today? And it's just okay, just get on with it. Life is going to go on. We'll figure it out. I think that's part of it. But I think there's also different segments of the population that are experiencing it differently. I think really depends on how it's affecting them personally. For some people who are in those parts of the economy that will be directly affected by tariffs, for example, the automakers, steel, those kinds of things, I think they're extremely concerned. There's been layoffs already for some of these businesses. And so they're just wondering how bad is bad going to get. So I think that's part of it as well. And then there's other segments of the population that it's really not affecting so directly. I guess in the long term, they'll be affected by rising prices and things like that. But in terms of job stability, they're pretty secure. And what types of jobs am I talking about? Things like government jobs where you're maybe like police, fire, ambulance, healthcare workers, those essential services. If you're in things like electricity, water, gas, the utilities, they're pretty solid, I think, as well. And I'm sure there's some others that
And that's where knowing the statistics of what's happening, talking to your real estate agent, looking at what's happening. And right now, it's becoming a little bit more of a balanced market because there's a good supply. And also, the first time buyers that have been sitting on the sideline, if they have that job security, they're coming back in because the interest rates are good. There's a good supply. You can actually put offers in. You don't have to go unconditional. And so there's definitely a good balance there. And the affordability interest rates are pretty good based on 5 years ago. What we're seeing definitely people coming back in ever so slowly. But again, as Craig said, and it depends on your situation. You do have to weigh it all out just to make sure that it's right for you because only you know what your job stability is, your risk factors are. And but real estate is always a good investment, and you will always, just like the stock market goes up and down, Yes, there will be those ups and downs in the real estate, but real estate is definitely something that you can enjoy and have build your life around and have that stability and create a good life. Even in all the kind of negativity, I think it's good to zero in and look at all the good that's there. And truly, there's a lot of supply that you could find the right home. I think that's the positive as long as your job is secure.
I think there's lots of pros and cons, and maybe what we should do is outline like the pros right now for there's the pros of waiting, and you have lots of time to plan if you decide you want to wait and you get your ducks in a row and the interest rates you can settle yourself with them, and that I think helps us move forward. But if you on the other hand you also have that if you wait you may have higher costs because we do have right now a lot of houses on the market where we have a great choice. But as people settle in and feel more comfortable with what's going on in our economy, they may choose to come back to the market and take away that supply. So you may end up paying more in the future.
And there is also that uncertainty with interest rates. So the last Bank of Canada rate announcement in March dropped the overnight lending rate 25 basis points. And that was the seventh consecutive reduction. They were hoping to be doing a 50 basis points on the next announcement, which I believe is April the 16th. And then some different things came into play, mainly being the inflation rate. So I think the goal for inflation is to be around 2.2%. And I think the numbers came out at 2.6, somewhere around there. So now it's going to be what's the Bank of Canada going to do with these mortgage rates? Are they going to reduce to try to get ahead of this potential tariff war and the impacts it's going to have on the economy? Are they going to say, no, we've got to stimulate the economy and reduce the rates? It's all this uncertainty, I think, that sort of makes people say, what should I do? Should I wait and see or should I move ahead? And I guess there's this thing in my head that sort of looks back at when things were just normally moving along, COVID hit, and then in order to stimulate the economy, the Bank of Canada reduced rates and reduced rates and reduced rates to where I called it free money almost. And despite the fact that there were still a lot of jobs that were not able to work and people were out of work, the government stepped in. They had some programs to help those people, but the interest rates made it so affordable that everybody decided now's the time to buy because they could buy more. The monthly costs were lower. And I think for most people, when they're buying anything, whether it's a house or a car or furniture, they're looking at, can I afford the monthly payments? And so with interest rates dropping, monthly payments become more affordable. And I noticed myself just since the last rain announcement last week, and maybe this is why you had said, Ruth, at the beginning of our call, that in the last week you've seen a little bit more positivity in the marketplace. It seems like there's been more activity in the marketplace in terms of offers coming in. And again, it becomes that question. Why? Is it because of the interest rates? Is it because people are fed up and they're just going to go on with their lives because they've got to live? Or is it because the weather's gotten better? It's just all of these things, and you have to pick out, is there one particular thing that's made this change, or is it just a little bit of everything? I don't know.
I was definitely at a client yesterday and they said the sun's out. The sun's out. Everybody's going to feel better. So I think, yes, you're right, Evelyn, that we all know that the more snow and the worse the weather is, the worse the market is. And as soon as we start to get spring, people come out of the woodwork and say, let's get on with our lives. The good times are back.
Hmm. And that it's partly that, and like I said, it's also that affordability. You got to live somewhere, whether you're renting or you're owning. We know that for most people, they're making their statement, they're making their mark, they're building their net worth through real estate. You look at way back, I look way back when I bought my first house and I thought it was so much money. And now I'm like, oh my God, if I knew that, I would have bought 10. You didn't have the money at the time, but now you're saying, like, wow, if I knew that, I could have gone bigger or whatever. It's
Yeah. And it's a great thing as a first time buyer. It is scary, but I know the same thing going back when I bought my first home. It was like, ooh, but it caused you to save, it caused you to plan and just really be strategic. And it's accountability. You got a house and you got payments and all of the things that go with it. And so it's a good thing. So it's definitely, sometimes you weigh the costs. Should I, shouldn't I? And it is. If you've got the wherewithal to do it, definitely get yourself into a home. And that is the beginning of a whole new chapter in your life. Sorry, Craig, you wanted to say something. I think I put it in. Sorry.
Again, I think one of the other things that, just regarding this market transition and the uncertainty is to talk directly to those people who are affected. Perhaps you're in the automotive industry. In the last couple of weeks, I spoke to two individuals who are working at the Ford plant with the retooling and possibly bringing in an electric vehicle. Now those electrical vehicles aren't selling as well. And then there's the tariffs and such. And they're going to be facing some difficult situations. There's the people, as I mentioned, we're in steel towns, Fasco, Stelco workers, some of the layoffs and the ramifications should there be extended tariffs in those industries. They're going to be facing the prospect of not having stable income. And if you have a mortgage, you have family commitments, you got to buy groceries, all those things as well. What is the best course for them at this point? And as we mentioned before, no one's got the crystal ball. We can't say how long it's going to be, but they need to make some decisions coming up on what would be the best recourse for them. So there are some mortgage remedies that banks are often offering, even post-COVID. Some of them offer skip a payment. Some of them offer respreading your mortgage out over a longer amortization period that might help in the meantime. But what are your thoughts, guys, on what should that person who is facing direct implication from not only the tariffs, but some of the geopolitical and economic uncertainties of the market?
I was listening yesterday to someone who was talking about the stock market and saying how it's really been plummeting. All the different indexes have really come down. But he also said that it's not really because of the businesses themselves having issues, it's because of the threat of tariffs and this uncertainty and what the investors are thinking. But fundamentally, the businesses themselves at this point aren't really having issues other than this, I guess, perceived issue that may come or may not come, right? Now, tariffs are on today, tariffs are off today. Who knows? So I think that's a little something to consider as well. It's early in everything. So, yes, there is a lot of uncertainty. And I think you're all right that there is a great opportunity right now to get into the market early before everybody realizes we're okay, the rates are good, there's a product out there to buy. But again, it's looking at your own situation, as we've always said, right? Are you in that stable job? Can you afford the payments? Are you planning on staying there at least 5 years? Those kinds of things.
Yeah. There's IT. Again, that tech sector is pretty much insulated from that intellectual property that they have. And of course, government positions. Again, there's as stable as most type of industries. I think there's always there's always a segmentation in the market, as you mentioned.
And just even looking at, like yesterday, I was going through one of our clients' portal from one home where they're receiving listings, and on it there were 6 homes under the 600 mark, and 5 of them were conditionally sold. So that tells me that segment of the market is hot. So if you are in that there's a lot of people getting into the market because that's the entry level in the Hamilton area, and it certainly is definitely a something to get looking, because there is many homes for sale, but they are also going quickly, because that's a good price point to get in, because those are where single detached homes, you can't beat that price, because a condo you will always have minimum 500 in maintenance fees, plus of course on both you're going to have your taxes, but the single family home is a little bit more affordable than the condo.
And I think as well, I'm seeing that we're seeing multiple offers again. There is a lot of product out there, and the days on market of a lot of those products are very high. However, you've got to look at what are those sellers expecting? Are their expectations realistic or not? I would think if you're on the market that long, you're probably overpriced because we are seeing things that are showing well, that are coming on the market, priced well, that are marketed properly by their agents, are selling quickly. And often we're seeing those properties with multiple offers. So there is activity. The board released its stats earlier. Sales are down, prices are down, but they're up from where they were last year. So
I agree, Colleen. Yesterday, I also was looking at the figures, and also saw a lot of sold conditionals. And that sort of makes me think back when we were talking back to the stock market. It's not the businesses that aren't able, it's the uncertainty. And I think that's the same in real estate. It's not the people that aren't ready, it's the uncertainty that's causing everybody to sit on the sideline. So I do think I remember, we all remember back in the 80s when everything crashed. I bought a home at the very top of the price range, and still we're sitting here 30, 40 years later, and the house is worth four times it was. And I bought at the peak, it was worth $100,000 less about a year later. But if personal timing right now is good for you to go ahead, in the long run, you're going to benefit as long as everything sits for you. And I think that's it. If your eggs are already, you're in the basket, don't wait any longer, because as you said, Craig, the signs are there that it's starting to pick up with all the sold conditionals.
Just as COVID pushed people to do things that they were thinking about, they wanted to live in the country, they wanted to move, they wanted all these different things. COVID made them make that decision. And so sometimes when we have these overriding things going on, okay, it's time. I got to do this. And you know what? And I think we always have to look on the positive that this is a good thing. I am moving forward, and this is going to open up a new chapter. And that's for the ones that are maybe negatively impacted, that, okay, maybe now is the time to downsize. Maybe this is the next chapter to do this, and taking stock and finding out where am I at, and where do I want to be in the next 5 years, the next 10 years, and just allowing this to, all the winds that are blowing, it doesn't have to affect you. It just means that, okay, this is a good time to, yeah, based on what I'm seeing in the market, this is a good market. Need to do something.
and I look like you, Ruth, I look back at my own life, and we bought our house in 88, peak of the market. We were just getting married. We purchased this house. We lived there for a number of years. And then remember, there was another down turn in the market years later. And at that point, we had started to build our family. We needed something bigger. And we made that jump from our first house, which was a townhouse, into like a detached home. And the price of that detached home on the larger end had come down considerably, as they always do, because people don't have the money to do those higher purchases, just like it is right now. And we jumped into that for a really good price. We've made a lot of money over the years. And this is a time, even if you're in a house and you're looking to buy larger, and maybe you're saying, I'm not getting as much as I thought I would be able to get for my house, or I think my house is worth more, but I really want that other house. This is a great opportunity to make that leap into something bigger, because even if, say, prices came down, let's just make easy numbers for my simple math, 5%, and you were in a house 100,000, for easy numbers, it would have come down 5%, $5,000. If it was a $200,000 house and things were even across the board, 5% of 200 is 10,000. So it's come down even more. But what we know is that usually on those higher ends, they wouldn't have come down just 5%. It might have been 8%. So that's where you're making that difference. And it's a perfect opportunity to go bigger if you can. And again, it comes down to that affordability. If the numbers make sense, whether it's your first house or a move up, and you can afford those payments, and you feel that your job is stable, even the most stable job, we don't have 100% certainty on anything in life. There's a risk to everything. But if overall you feel pretty secure where you are, then this is a great time to make that leap. We always tend to do what everybody else does, right? The fads and everything else. And consumer confidence is because of all of this uncertainty. And then you tend to do what everybody else is doing. They're paralyzed because they don't know what to do or what their options are. So maybe this is an opportunity for you to sit back and really dig deep and see what is your particular situation, what are your options, and then based on that information specific to you, you make your choice. What's good for one person isn't good for the other, but it's taking that time to figure out what is available for you.
And even if you're just getting into the market too, something to think about is having a home that has an in-law visit down below, because it's a great way to start. You're dividing up the expenses. You're not doing it alone. Of course, you can do it with family. You can do it with somebody that has been pre-qualified so that they are a good fit. And it is a great option if you're entering into the market, or even again, downsizing. You may want the whole idea of having someone live in the home so that you as a snowbird can go south and there's somebody to shovel the snow and take care of everything. That whole opportunity is there when you consider having intergenerational or just somebody else living in your home. And not all people want somebody living in their home, but those are options that, again, we're always looking at seasons in life. And so it's never forever. And we don't know until we give it a go. And at the end of that, you give yourself a year, you pre-qualify the people and just say, hey, this is what we're looking to do. And if it works, great. If not, have a contract written up so that it's absolutely no skin off your back, that it's just a business transaction to see if that works for you. But it certainly is another way to get into the market and live economically.
Again, it comes down to that your personal situation, but you are absolutely correct. There are lots of options available. It may mean that you have to sell, but it may mean that you don't. You can also look at what the interest rate is that you're at. Maybe you're at a higher interest rate. Maybe you can refinance and pay a penalty and go for a lower interest rate. But again, that's where you need to speak to a professional, a mortgage lender who can work out the numbers to see if it's worthwhile or not. That's one option. As you mentioned, Colleen, before, maybe you've got an option where you can rent out part of the house and get some income coming in from that. Depending on your lender, you can skip a payment, as you said. You can change your amortization period. So there are lots of different possibilities, and you need to reach out to someone for that. In terms of the financial aspect, I would say reach out to a lender if you need a good reference. I'm sure we all have excellent representatives for all of the different banks and even private lenders and mortgage brokers. If you're looking about what your options are in terms of real estate, again, that's where you want to speak to a realtor. They can tell you what you can get from your house. Maybe you would need to sell and maybe downsize to something smaller, or maybe you sell and you downsize, but you just move out of the area and you're in the same level of house, maybe even bigger, depending where you're at. So definitely options available. Don't feel like you're pressured in a corner, because you're not. There's always workarounds.
Yeah, it's great that again, it all comes back to personal timing, I think. And then we have to also start looking about what's the missed opportunity. If you are available and you can make a decision now and you have all your set to buy a property, then go ahead and do it now, because the missed opportunity is that the inventory is here right now. You may not have that perfect house, may not be available when you're ready if you sit on the fence. Where if you can see that house now and everything is ready for you to make the move, go ahead and make it, because you won't be sorry.
It's like that 2020 rule as we look back and say we should have bought more houses way back in the. And the other thing too, if you look around the neighborhood that you're living in, you're probably not seeing a ton of new builds right now. Everything's just sitting because the builders, they're just sitting saying that, especially in the last 2 years or so, the interest rates were so high, people weren't buying. So they put everything on the sidelines. But when things change and people start getting back into the market, then those bills have to catch up, which takes time. And in the meantime, you've got to live somewhere. So that's why that's something that you might want to consider too, that timing, your need to be in a place If when the market does change, there's not enough homes, so that's just going to push prices up as well. So I guess when we talk about overall just how the tariffs, the inflation, the interest rates impact you, it is a personal analysis that needs to be done. I think from our conversation, we're saying that basically, if you can do it, now might be an opportune time to do it. Look at your job stability, look at the ability for you to afford, and whether you are on the fence and you're just trying to figure things out, at least start, like you said, Ruth, is exploring it. Get pre-qualified, which is absolutely great because if the rates go down, you're going to get those new lower rates, but you're also going to get to see what your monthly payments would be. You're going to know at that point whether it's comfortable and affordable for you. And then you reach out to a realtor who can show you your options. And sometimes we're so focused in a specific area. And then if you just go over one street, the prices drop dramatically. I know that's like in the country where I am too. You could just go to another area and the prices are a whole lot less for the same thing. Get to know what the market has to offer. And then at the end of the day, I think it's really a decision that you have to make, but keep your eyes open. Any last comments from anyone?
I think we do this every week about different situations, and we always end up back at personal timing. If it's right for you, if you can actually make the decision now and you're not stressed out about it, and you think, I could do this now, do it.
Okay, thank you so much for joining me once again. We meet just for everybody to know, we meet as part of a mastermind group on a weekly basis. We're always having these conversations, and every once in a while, we would like to share them with you. So I hope you enjoyed today's podcast. If you are looking for a realtor in the Brampton, Mississauga area, please reach out to Ruth. Ruth, if you could just give them your contact information.
Yep, Ruth Valentine, Remax Realty Services. You can reach me at 416-779-8732.
And if you're looking in the Hamilton, Niagara, Ancaster area, then the Bush team is a great resource. Maybe you can share your contact information.
Yep, Craig and Colleen at 905-308-1877. We're here to help.
Great. And if you're looking for help in the country, Caledon, Erin, Orangeville area, you can reach out to me, Evelyn Lopes, and the number is 905-965-5902. I will put all of the guest contact information, emails, all of that in the show notes below. So if you didn't have a pen with you, you can just check it out below and feel free to reach out. We're here to answer any questions, no pressure, just information to help guide you on your journey. Thank you, and we'll see you next time.